All right, Brian, we're taking a look at the markets right now. We're seeing kind of a mixed market here in the grains. What are you seeing move the needle so far today?
Well, the corn market's setting back after some big gains on Friday. It looked like the funds really stepped in and bought that market without a lot of fundamental news justification behind the rally. So we're giving some of that rally back this morning. We did have a private export sale, which is great to see, but it provided maybe some early support. But now we're starting to fade a little bit as the day has worn on here. I think the fact that we're going to see some pretty active harvest activity over the next couple of weeks is going to limit our advance for corn, but yet the technical picture has improved, and that should have the funds buying short positions back as we go into harvest. So basis levels remain real soft. That's a negative for the market, kind of indication that maybe our demand and it is equal to our supply. Our supply is going to outpace our demand here over the next several weeks. Now, the soybean market had a little bit of news over the weekend that China had bought 10 cargoes out of South America, 4 from Brazil, 6 out of Argentina. That should be a little negative for soybeans, but President Trump did tweet that he just wrapped up a meeting with China and talks went very well. So trade's, of course, hoping that this will lead to some additional export business. I'm in the belief that it will not. China does not have to buy from us. They have plenty of product from South America to buy, and they're covered all the way through mid-November now. So if they buy anything, it's more just going to be a token purchase rather than a concentrated effort to buy U.S. products. And we're seeing a small bounce in the wheat. That'll probably be very just short-lived, just oversold technical action with good rains in the forecast for a lot of the winter wheat plains this week. Should really help that crop get off to a decent start.
Over in the livestock here, we are looking at, across the board, we are jumping, especially feeders way up there today. What's happening here?
Yeah, we sold off real hard on Friday and extremely overdone to the downside considering the news. There was expected to be a USDA announcement on Friday afternoon. A lot of the trade took some protection on fears that it would be some sort of announcement of the border reopening, and it was not the case. USDA rolled out $1 billion for livestock feed losses from the floods and wildfires, and that was the announcement. So we're putting some premium back into those feeders and fats contracts because we took too much away on Friday. And looks like cash trade could be steady to lower, but the futures are already fairly discount to that cash trade. 240 was our trade last week. We're 233 even after this rally in October futures. So again, we're 2 discount. Probably need to narrow that spread between the cash and the futures. We have the cattle on feed on Friday, and that looks to be a very bullish report as well.